Hi, today we are discussing about Mahindra & Mahindra Finance, which is a subsidiary of Mahindra & Mahindra. This company is engaged in the financing of vehicles, mostly tractors, cars, utility vehicles, commercial vehicle, construction equipment, SME financing, etc. So while auto sector has been on a slow lane of late, the financial performance of the company has been improving. So let us understand how should investors be positioned for the stock. So what are the things that we like about Mahindra & Mahindra Finance? First and foremost, the growth in the asset book has been quite healthy. In fact, it has been to the tune of 30% in the first 9 months of the current fiscal. And although there has been a tad slowdown in the end market, the company is still confident of maintaining over 20% kind of growth in the asset book. The asset book remains extremely well diversified, which means that the slowdown in one segment can be compensated to some extent by growth in some other segment. The third and the most important thing is a diversified funding source, and over 40% of the funding coming from stable bank sources, which has actually shielded this company in the recent turmoil in the financial markets, which impacted a lot of NBFCs. The asset quality is also on the mend. While the headline NPA numbers look still elevated, but the management mentions that the underlying trend is improving. Finally, on the back of a reduction in credit cost and improvement in net interest margin and a reduction in operating expenses, the company expects its return on assets to improve from 2.2% currently to 3% in the next couple of years. What are the investment risks for Mahindra & Mahindra Finance? First and foremost, the slowdown in the auto market could lead to slower demand from end customers. This company is extremely well entrenched in the rural areas, so any adverse monsoon could also impact this company. Anything which impacts cash flow in the rural areas, including a slowdown in infrastructure activities, could also impact this company. So what do we recommend for Mahindra & Mahindra Finance? We are still quite positive on Mahindra & Mahindra Finance, and the reasons are the following. First and foremost, this company is extremely well entrenched in the rural areas. It has a marquee parentage which shields it from a lot of turmoil, including the recent funding crisis which engulfed the sector. The stock has corrected by close to 11% in the last 3 months, and now the valuation is still quite reasonable at 2.1 times FY20 book. So we recommend that investors should accumulate this soft phase of the stock with an eye on the long term. Thank you for watching, and do stay logged on to moneycontrol.com for more news and updates.